Hey guys, how's it going? It's Andy from MagooInvesting. Today we're going to be continuing the Robinhood. Hello? Alright, attempt number 2. So today we're going to be continuing the Robinhood Top Stocks series, and today we're going to be talking about Netflix. And I kind of had a list of stocks that I wanted to talk about, and I hit the end of that list and I hadn't planned ahead. So today I went on the most popular stocks on Robinhood, and one of the ones that kind of stuck out to me was Netflix. And the reason it stuck out to me is because it had a 70% buy rating, which was higher than most of the stocks on that list. And so in this video, I'm going to be talking about any long-term or short-term potential plays I see with Netflix. We're going to look at the charts and kind of see what I see there. And then I'm going to talk about just kind of how I feel about the company overall and talk about if I see any plays for myself going forward. And so I got to say, I'm not a licensed financial advisor, so I'd highly recommend talking to a professional, someone that give you the best advice on where to put your money safely in the stock market going forward. And so Netflix is one of those companies that I feel like everyone knows and everyone pretty much has been a part of at some point. You might not be paying for it, you might be mooching off of someone else's subscription, but I feel like Netflix is a very household name. And so looking at the charts, it's come down a long way from its high of around $400, and now it's currently sitting at $280. And so for someone that likes buying companies that I know that have been knocked down by poor earnings or bad news, this seems like it could be a great fit for me. And Robinhood says it's a 70% buy rating. That sounds pretty good. But I just have a lot of hesitation when it comes to Netflix. With the other streaming services kind of picking up steam, with Amazon Prime, Hulu, and now Disney coming out with their streaming service, I feel like Netflix isn't the top anymore. And I think the price and the stock has taken that into account. So I don't think that the 400 is going to be someplace that it comes back to anytime soon. A lot of these big news events that have come out recently with Disney announcing their streaming service, they're losing Friends on Netflix, and before that, how they paid $100 million just to keep Friends on the streaming platform kind of has been worrying me. And I'm seeing these news stories about how they're pouring all this money into creating new content, which sounds great, but I just keep coming back to the fact that I think they need to raise their prices. And obviously I don't do a lot of fundamental stuff, but their prices have stayed pretty steady for a while. I remember back in the day, back when they had the DVD, they'd mail them to you, and they first came out with the streaming service, and you could bundle them or you could do them separately. And I feel like the price hasn't gone up that much since then, and they've put a lot of money into their streaming service and into creating new shows, and they're great for that. But when I think about all the stuff that I've done or that I've watched on Netflix recently, it's all pretty much been Disney movies. And at the end of this year, Disney movies will be leaving Netflix. So I'm kind of at the point now where I do most of my streaming on Hulu, and I don't think that Netflix is the best place for me to put my money going forward. So that's just kind of my broad analysis of the company. Now let's hop on over to the computer and we'll look at the charts, because for me, charts and technical analysis is where I make my decisions. So back on Robinhood today, looking at the 100 most popular stocks. Today we're going to be going down a little bit. Tesla, Zynga, and there it is, Netflix, sitting at $280 currently, with 101,000 people owning the stock and a 70% buy rating. So as I mentioned, I was kind of just going through the stocks, looking at what the analyst ratings were, and you have stuff like Microsoft that makes a lot of sense, Disney, I'll have to talk about Hexo in a little bit because I don't agree with that, Facebook, and then you came down here and Amazon 100%, because, you know, Amazon's the overlord of the world. Twitter, as you can see, I have 10 shares now, 31% buy rating, disagree with that. But then I was kind of surprised that Netflix has a 70% buy rating. And so as we go on it, it's down just a little bit today, up 5% this week, 5% this month, down 14% in the last 3 months, and down almost 8% in the year. But when you look at the 5-year, up 412%. So that's really nice returns for a very large company now, but it's down from its high of $400 from July of 2018. So as we make our way over to TD Ameritrade, this is the past, actually let's go to the past 180 days. So past 180 days, it was horizontal for a while, and then earnings kind of knocked it out of the horizontal pattern that it was going through. It came down, it pushed up right before earnings, and then earnings knocked it down, and it has since recovered a little bit. So looking at this chart, this is kind of the chart I look at if I'm going to take a shorter term trade. Based off of this, I'm kind of liking this for a short term trade. And the reason I say that is usually when you have earnings that knock it down pretty far, if it continues to push down, it's not a good sign. It usually means that people kind of agree that, oh, maybe it's not as good of a company as previously thought. But when a company falls and then immediately starts pushing back up, I kind of like that as a short-term play because it has the momentum pushing it up. And so as a result, I would have to see it break above right around here before I'd be comfortable taking a position, just to make sure it can break this previous level. And then I'd be comfortable kind of taking it up maybe to this level. But as we go further back, I'll talk about why I don't feel super confident in a long-term position. And so this is the past couple years. As you can see, it's been very steadily going up, as the 400% in the past 5 years showed. And so it had its previous highs of $423 in June of 2018, pushed down, came back up, fell, was horizontal for a while. This was a very nice area where if I was watching this and I was a shorting person, this would be somewhere where I would have taken a position potentially, because this is a pretty easy support and resistance to see. Earnings knocked it down and it continued to fall. And so I drew these lines as potential support based off of it touched here in November of last year, and since then has bounced from there. But charts aren't kind of the only thing that I look at. It's one of the only things I look at if I'm taking a short-term swing trade, which I talked about. I kind of like the how the chart looks for that. But when you have to take into account the type of company you're trading for a longer-term position. And for a long-term position, you have to take into account its competition. And I think that it's losing ground. And as a result, I don't think it's going to be pushing up to its previous highs. Netflix was one of those companies where if you owned it a couple years ago, you made a lot of money. But I think that realistically, Netflix is not going to hold at this support level. I think it's going to retest it and continue to fall, maybe down to around the 200 level. So that's kind of where I think the company is going to be going. Taking a long-term position, I talk about taking a position in something that's been knocked down because of earnings, but it's also a company that I know and a company that I'm confident in. And the confident in is the important part for why I don't like Netflix for a long-term play. I think that's losing ground, and I think that as these other streaming companies start to build up steam and become stronger, I think Netflix will be going in the opposite direction. And then when we go and look at the price forecast, you see that it is a pretty wide range. It's up 5% year to date, but it's down, I think it was 15% in the year. Let's go to Netflix. Down 8% this year. So for a year that's been very nice for stocks, Netflix has not been doing so great. And so for the price forecast, it has the high for the forecast up 58%, median at $400 for the plus 42, and then the lower end is 33%. And for such a large cap major company like Netflix, that's kind of worrying for me, because the other large companies that we've talked about, the lower range has been 10% or smaller. And when you see something like down 33%, considering it's pretty far off its all-time high, I'm not super confident in that. However, they do have it as a pretty decent buy on here. But as we come and take a look at Yahoo Finance, they have it near fair value, hold, green for the short term, which I agree with, as I already explained, and then down for the medium and long term. And so I agree with all of that. I think that Netflix is a very well-known company, and I think that in the upcoming future, it'll have some problems, and I think it'll continue to fall. So I don't think this will be a position that I'll be taking anytime soon. I'm going to be very interested to watch what happens. I'm going to set an alert to see if it breaks below this level. I don't feel confident enough to take that short-term position that I mentioned, but I do kind of see some potential there based off of bouncing off the support, higher lows, and if it breaks above this previous area, which was a support over here and now may become a resistance here, I could see a potential play up to the 315 level. But I just don't think that it justifies taking a position. I think this is kind of a company that I would recommend just kind of sitting on the sidelines and watching, because I think we're going to come into some tough times for Netflix. And overall on Netflix, I kind of agree with the analysts and the fact that I think you could have potential plays for a short-term swing trade, maybe not a day trade because it doesn't move enough, but yeah, a swing trade. Just for the fact that it just got hit by bad news. It'll probably rebound a little bit, but staying in Netflix long-term I think is a mistake. I just don't have a lot of confidence in Netflix going forward because I think they're losing ground compared to these other streaming services like Amazon Prime, Hulu, and now Disney coming out with their streaming platform. And I think that Netflix is no longer the giant of streaming that it used to be. When you look at online retail, Amazon is definitely the king, and I don't see anyone coming for it anytime soon. Netflix used to be the same way with their streaming service, but they've had a lot of competitors come up and they're slowly starting to take customers from them. And I think with Disney coming in, taking a lot of their content off of the platform, I don't think Netflix is a good place to be having a long-term investment. I think the next time the earnings come out, I think it's going to fall even further and just slowly start declining. But that's just my own opinion. Let me know what you think about Netflix going forward as a company and as a stock. And thanks for watching. I'll see you guys in the next video.